Hey, Pete.
Hey, Marion, how's it going?
It's great. We had a great day trading, a great afternoon, actually, great morning also.
We finally had something to do prior to 12 o'clock today.
Yeah, exactly. And it continued into the afternoon. And you had a couple of really awesome trades there, call outs, Home Depot and Amazon.
hmm Not exactly momentum trading, but that's fine. You know, day traders especially are used to stuff moving quick and violently, and today was really just it's obvious, just stay on the ride until you see a change, and it really didn't change other than maybe a little bit of profit taking in at one point during the day.
I think there was profit taking, and I also think that there were maybe a little bit of caution. Let's take our trades now because we don't know what's going to happen on Thursday.
I actually started to get that kind of feeling this morning where it felt like there was more jockeying for position than outright building of positions because normally you'll get some nice follow through with candlesticks and you'll get your nice let's say dollar 50 move higher and you move cleanly, and today we were kind of getting like it was 10 minutes of spurts and then we would slow down and then another 10. It was just not violence, really not the right word, but it just didn't feel like there was institutional order flow taking positions. It was really more like digging in anticipation of what's going to happen.
Yeah, there was no really momentum to, except for a couple of stocks. Netflix had incredible momentum in the afternoon. I
Pull that
actually
up.
late morning because we were still in the 9:30 room. Paula got into it. I got into it. I don't know who else was in it.
Let me just pop that on the 10-minute chart to give everybody a pretty good idea what we're talking about here. What was interesting about Netflix, especially in the morning when we were watching it, Mary, we kept watching this support level here, and we'll actually pull it out. You can see to us, it's very clear that support shouldn't be any more complicated than where is the last place buyers did something significant or obvious, and clearly this was the level before we took off. And then also we had a pretty big day last week on the downside prior to the day when they announced they were going into more areas, but they actually happened to coincide with the same level, which was 903.50, I believe, a
Mhm.
ballpark figure there, and
Right.
we got down to within 11 cents of that today. So we actually noticed in quite a few stocks today, they very conveniently just barely took out the lows on a few, with not really flushing through the lows. We kind of just, and again, this is really a good example. You just get through the previous day's lows. A lot of stops trigger, and I guess you could actually see that better here if we zoom out a little bit, where we didn't exactly blast through those lows, go lower, two red candles, and then have a consolidation. As soon as we got through the lows, we had bottoming tails right away. And I think Amazon was probably one of the better examples of that, where we took out the lows and then rallied $8 pretty quickly off the lows. This was actually the interesting part here. I know I actually logged out of the room at this point, and this to me was really what would have been very interesting, because that would have if we would have traded back into the middle of the ranges, like say down into this area, maybe not necessarily even trading all to the lows, but traded back into here, then we would have just had more of a continuation of what we've been seeing in the market, where we've pretty much been alternating back and forth with selling, buying. Even though these 2 days were green, they were still basically inside days. Then we had yesterday's just ridiculously putrid selling, which yesterday was one of those days, and I guess yesterday coming into today, where I literally had no bias whatsoever. Now, normally, it could be like, we traded up a couple of days, maybe we're taking a break. We didn't really do anything for 3 days, other than this big selling day, which didn't even have monster volume, but it was a very obvious trend day down to make money. So I'm sure today took a lot of people by surprise. Did you start getting texts and that kind of
Yes,
stuff
we
about?
did. And people were like, "Do we buy here? Do we buy here? Do we buy here?" And I'm like, "Wait a minute. Or can we still buy? Can we still buy?" You know. But by 2:30 in the afternoon, I was like, "No."
Yeah, exactly at that point. Now we were flirting with the 20 period exponential moving average on the daily chart, right around this area, and we finally just pushed through with a lot of conviction. It was look, if somebody's watching this right now and they feel like they kind of missed out, give yourself a little bit of a break. That there really was not a longer term bias for you to say, wow, I just can't wait to be long today. There really wasn't that to the market today. However, we do make it very, very clear in the morning. If that's the case, that simply means you drop down to lower time frames and you use shorter time frame reference points, meaning I'll just flat out say it, day trading reference points, which those are the previous day's high and low. And, again, we talk about the opening price a lot and whether or not you're getting continuation patterns, but just recognize the fact that they're more likely not trades you're going to be adding aggressively to, because there's not a lot of price history behind this move. So you're really not trading with multiple time frames. You're just trading with that one time frame, which is kind of, if you really think about it, that's kind of old school day trading. You're just looking at what's going on right now.
Right, exactly. And actually, in the room, we did drop down to the 5 minute. That's really rare for us to do.
Yeah, I know in the morning we were over here. We was talking about it briefly. I don't know. Did you guys do it again in the afternoon as well, a little bit?
No, it was mostly that morning when we got into a lot of stuff that we had dropped down to the 5 minute.
I think it was right here in a lot of stocks, because we had basically almost 40 minutes of the market moving higher, but no entry signals. And I think that was starting to drive everybody a little batty. It's like, all right, clearly it's going up. The spiders just rallied $1.50 and there was no place to get in. Right.
And so we dropped down and we found places to get in. It was kind of a difficult day to try to find the entries, but there were actually clean entries there. I'm a lot more cautious when I get in on a 5 minute though.
Absolutely. You can manage the risk a little bit better, but you really you're stepping back and admitting there's not a lot behind the trade other than literally what's going on. So how do you read today's close into tomorrow? Now, tomorrow the meeting starts. We're not actually getting the announcement. Normally it's Tuesday, Wednesday. This week it's Wednesday, Thursday. Are you reading too much into the close and just saying it's 1 day's worth of trading? Or are you saying, all right, maybe we can build on this?
You know what? I think we saw relatively few getting out of their sales for the day. And so I think we can build on it. I expected at the end for everybody to bail out of their stock, and we would maybe see a much bigger, like a retracement rather than just a pullback in the spiders.
Mm-hmm.
I consider this more of a pullback rather than a retracement.
So let's actually review what we had coming into the day, just in case somebody is not necessarily day trading, but just to give them a concept of what we were looking at coming into the day. So this is actually the map. Actually, I have to change that. It's actually the S&P 500 heat map coming into today. So this is for yesterday, for the 14th. And you can see coming into the day, Facebook still hanging in there. We'll get into Facebook a little bit, not selling off, but still hovering at or near right around that 50-period moving average and a pretty obvious breakout level. Apple continuing to grind higher. But other than that, most of what we're looking at was pretty neutral. And you can kind of see that's reflected in the candle here where it actually closed in the middle of the previous day. So the heat map, as well as the chart of the SPY here, very, very neutral coming into today. So you have to give context to what everybody who was day trading today was looking at. How could you set up a bias coming into today expecting to, and I'm not, aggressive is relative, but I'm going to use that word anyway because of how obvious the trend is now. Again, obviously looking at it at 4:30 in the afternoon, there was not a lot of, there wasn't a very strong conviction level on either side. Is that a safe way of wording?
Yeah, I definitely say so. Yep.
And so that's the price action from yesterday. So you can kind of see why the thought process was, because you never want to be like, oh gosh, you guys must have killed it today. It must have been so great. And there is, of course you want to read what you see and all the trading cliches from 100 years ago and whatnot. But the bottom line was coming into today, it was very neutral and difficult to say, boy, I can't wait to jump on this because it's so obvious. We just weren't in that tape. But then, obviously, here's what we're talking about. We're going to talk about, we just talked about the bias. There were a few high beta stocks at breakout levels, and obviously Facebook was one of them. Netflix, interestingly, was one on the other side where it was having a hard time and actually looked like it was going to break down. So here's what we ended up getting today. So the SPY charts at the end of the day, very clean. If you missed this initial move like we were talking about, you did get a pretty clean half hour, almost hour. These are actually hour windows here where it just gave you plenty of time. Now, whether or not you initiated a new long between 11 and 12, completely up to you. However, at that point, we weren't selling off. We weren't getting any of those big, scary red candles that would be like, all right, I'm going to shake you out now before I do anything. It didn't do that at all.
Right, exactly.
So that's essentially what we're looking at. Now, here is how we ended the day, which is dramatically different from the plain old vanilla, no bias coming into today. So again, I'll ask you, what are you reading at it today? I mean, with this type of price action, again, a couple of days ago, this was very bearish. really beautiful selling pressure, really clean trends from high to low the entire day. And now we pretty much got the same thing today, smack on 100 million shares. So we kind of, it's like, don't do over 65. We hit that number. We said 100 million shares is okay. Something at least happened today, right?
Right.
So despite the fact that there's no bias, the 20s below the 50, both of them are pointing down. You almost have to go into tomorrow expecting follow through.
Yeah, I agree. And I think because we didn't get the sell off at the end of the day, I am expecting it. I did hold stuff overnight.
All right, so let's take a look at some of those high beta stocks. I know one of the favorite stocks that we have on the board every day is Facebook, and give everybody a reason of why. You can clearly see here it hasn't sold off. It's hovering at or near the 50-period exponential moving average for a few days. 91.22 was the exact number. Over here, it was having a hard time getting through. The number bounced a little bit higher as the price started to climb. Now, again, 20s below the 50, but they're both rising, which is kind of weird. But I guess that just shows you how fast the immediate price action. So we're probably going to cross here after now the price action, the price cross over the 50. And I'm feeling pretty good that we're going to get some follow through on Facebook tomorrow. And again, we've been watching it and having it in the list because of the amount of room that's available. Whether you use the body of the candle or the high of the candle is your preference. Obviously, we tell everybody we like the body. There's still a few dollars in there, a good 2, possibly 3, depending on where it goes. It's doing everything it's supposed to do. It's trading with the market. It's bucking the market when the market goes down. I love this stock for tomorrow.
Yep, I agree.
Amazon was one that was looking really, really good 2 days ago. Yesterday, we ended up having a monster down day. Open higher, got selling again. You're like, oh, gosh, where's this stock going? And lo and behold, not quite a bottoming tail, but certainly 3 dojis down here that stopped the push lower. The market bottomed out. The VIX started to bounce. And, if you didn't get the first one, again, the opening price, perfect signal at the opening price. A hammer holding the bid at the opening price, followed by, and we can consider that an engulfing candle, even though it's not perfectly green. So you had basically 20 minutes here to decide if you wanted to bid Amazon above the opening price here. Not really that much confusion about where the risk was. We had mentioned a few times during the day, you have to trade Amazon with at least, I think we mentioned, a $3 stop loss. That might be a little bit of an exaggeration. However, it's not too far off. So basically, you see you had maybe $1 risk in this if you like the long. Not a bad spot to get involved there. So there were absolutely things to say, but I will say, maybe we should term this video old school day trading where you're only looking at the intraday charts. But it absolutely applies. Just because the multiple time frames weren't in sync, that doesn't mean there wasn't something to do. Quite a few stocks did this in the afternoon where they did not retest the highs. They kind of pulled back. This looks like it pulled back a little deeper and actually got below. Yeah. But again, if you're new to trading or if you're struggling to find your way, you have to make a decision. Do you trade a list of the same stocks every day? Or do you scan all stocks on Wall Street and end up trading different stocks every day and looking for patterns? We kind of do both, I think, Marion, where we have our core list, Facebook, Netflix, Tesla, Amazon, those, and obviously the SPY and a few other ones, where we watch that list every day, no matter what. And then we also run the scan. So it's kind of an advanced thing. But as a new trader, you want to make sure you make a distinction between those two, or maybe even not a new trader. How about somebody who's struggling and they're not finding consistency? I would probably recommend picking 15 to 20 stocks, and that might even be a big list if you're struggling, and learn those stocks like the back of your hand. And this way, it's easier for you to know how they normally trade. And then, if and when you start to hopefully be consistent, then maybe you can expand that. But especially if you're having a hard time, you don't necessarily need a bigger list. You probably need a smaller list, and it'll be easier for you to tell when there's something to do.
I definitely agree with you.
I think new traders tend to want to trade everything, and especially new traders that are in proprietary trading firms where they see experienced traders doing a lot. And don't forget, you gotta earn your way to doing more. You have limited resources at that time, and I'm not even talking about money. I'm talking about your experience level to be able to handle all of that. Right. So if you're looking for something to trade, Facebook is very relatively. I can't. It's relatively inexpensive for a stock that has plenty of liquidity. I know it's $100 or ballpark around there, but trades very, very well. So Tesla was another one that we have on the list, and not as clean as some of the other ones. You can see there's a pretty big ascending wedge here on the daily chart. You would anticipate as it keeps tightening and moving up and getting higher, you're going to break out. So you got this horizontal trend line here. You got the 50-period moving average. A lot to get through there. 250 has been the number it just can't get away from, and you can see it actually hit it again today. So, look, I actually like this long. I mean, the way it's trading right now keeps making higher highs, higher lows, consolidating at a very obvious number. And again, if it gets through here, 260 is a clean run. The stock can make a $10 move in the blink of an eye.
Yep, and it has done that many days. It's not unusual.
Any other stocks? I'm going to go through the PowerPoint a little bit just to show everybody the stocks that we had in the list today. But anything in particular you'd like to make sure we cover?
No, I think the Netflix was a great, and we went through that. And the Home Depot that you called out. Maybe you want to go through that one. That was a great entry.
Yep, we were actually watching it in this range, and something that's every trader needs to learn how to do is the consolidation patterns are not patterns you want to anticipate what direction they're going to break out of. We're seeing quite a few stocks that are doing this right now. Whether you call it a flag, whether you call it a pennant, however you want to call it, you always want to let the market give you a heads up before you jump in, because the very definition of that consolidation means that there's indecision and no bias. So if that's the case, there's no reason to get in until there is a bias. So we saw it break lower today. It still remained in this box. And then all of a sudden, we just started to see these inside candles that were also doji. So essentially, that started to tell us, all right, we are not getting the type of follow-through that we should be seeing at these lows. It broke the previous day's low, and obviously, if you're a day trader, you know your previous day's high and low are monster numbers. You can see it here. It took out the previous day's low, failed. Today took out the previous day's low. It failed. It didn't follow through. So as a trader, you should know if a stock pushes down and pulls back, the classic test of any trade is you should expect it to at least test that level once. Kind of like actually what we got here at the high. We can get into that in a second. And while it was pushing down, we were noticing, all right, not only are we not getting red candles, but we're getting inside candles and they're green, and we started to see these higher lows. And all of a sudden, it became a long within this box here. So we ended up getting a pretty clean move to the upside. Now, again, if it was frustrating to you, and a big part of us doing this, and we purposely labeled this trading recap, not stock market recap, so that we can discuss trading setups. And we actually spent a lot of time on that this morning with trade expectation as well. But you need to know what your entry is going to be before a stock starts moving. So is it one of these candles? Is it a fail of the previous low? Is it a test of the previous low? Is it waiting for it to get back above the opening price? Are you waiting for it to trade above the previous, what was the previous high of the day, meaning you just made new highs? You can't be guessing on that stuff later. You also need to know how much you're willing to risk on the trade prior to the trade. So whether it's Amazon, which could move $10, or whether it's Home Depot, which could move $1, you could risk the same dollar amount, but once you put the trade on, you need to know where you're going to risk it to. Because I don't know about you, but I get a lot of questions about how do I manage my winners, Marion?
Right.
And you need to know that before the trade. There's no other way to put it. Whether it's a moving average crossover, whether it's the previous candle, whether it's a dollar amount you're not willing to let the price action pull back to. There is something to be said for building up a mental bank of profitable trades. Definitely makes a big difference when you're booking profits. You just got to be careful you're not booking them too soon just to ring the register and make yourself feel good. Can't make 300 on $1,000 trade.
Right, exactly.
So Facebook was a pretty good one. We'll just go through some of the other stocks that we had in the list from this morning. Bullish ideas definitely getting a little bit longer. You can see we had Amazon on the list, Starbucks and Facebook. Starbucks pretty much in there every single day. You just got to be really patient. It's an interesting stock to trade because you will absolutely get good, clean trend days. You just have to be patient to wait for them because the thing about that stock that I've noticed, and I traded a lot, is when it starts going down, it doesn't bounce. But when it's going up, it doesn't sell off either. It's just a weird thing. It's really long or short, or you can be confident. I guess we'll talk about these two, RCL and CCL, just to give a little reference here to the stuff in the same area there. My typing is bad this late in the afternoon. So the daily chart of RCL, Royal Caribbean, you can clearly see it's actually taking out new levels. So you have a choice now. You trade RCL versus CCL. You'd be like, all right, one's clearly long, One of them has not as much room to go. So you would think you would lean over to RCL. Today, they both happen to follow through in a pretty big way. But if I had a choice between the two, basically the point that I'm trying to make is you don't want to trade the laggard. If a sector or an industry is obvious, you want to trade the leaders in that sector. And if you quantify it based on relative strength, in this case, we're not necessarily saying the market cap and all that kind of stuff. You can clearly see that RCL was already past resistance levels and CCL was not. So out of the two, I probably would have spent more time on RCL, although they both did follow through. But this is as much about how to set up your next trade as much as just reviewing something. So the long list was not gigantic. However, the inside days were, again, one of the ones that I was watching with a lot of patience this morning, which had a pretty good morning, which was Ciena, CIEN. Not a giant ATR, but you can see here, pretty clean inside day. Inside days usually lead to an expansion in volatility, which actually you can see here as well. This is really what you're looking for out of an inside day, those kind of days. So today we got the first day out. Really good, clean push. Expected to fall through a little bit more, but didn't. A couple of other stuff that was inside yesterday or pretty close to it. These stocks are still not rolling over, which is, I'm not going to say fascinating, but definitely something to keep an eye on.
Exactly.
And I guess we could finish up on the short side. Obviously, the size of this list has been much, much bigger than anything on the long side by a mile. We mentioned that Wynn seemed to be bottoming out, and that's kind of playing itself out right now, as well as we were noticing the gigantic volume that has started to form the last 2 weeks in GPRO, and we're saying that this might just be perfect signs of accumulation. We'll keep an eye on that one. So I think overall, Marion, I wouldn't say the trend or the fact that we picked a direction caught everybody off guard. I think the fact that it didn't let up caught everybody off guard.
Right. I agree with you that we really didn't have any huge pullbacks during the day in anything.
Nope.
That one at the beginning and then the start of the day. And then after that, we just... It gave you plenty of opportunities to get in also. Which was
I think a lot of people got caught off guard today because that opportunity happened between 11 and 12 if you missed the move from 9:30 to 11. And I think that a lot of people were hesitant to initiate new positions, but that actually, and I think the spiders shows that best, that actually is when most people are not around to put on new positions or not looking to initiate it. And that actually ended up being one of the better entries. To get a pretty decent price there. You actually end up getting close to another $1 after that, if not more, actually.
Right, exactly.
So I guess heading into tomorrow, look, I don't see any reason we wouldn't be looking long. I mean, we did decent shares. It's not like we had a big trend day. We did 40 million shares in the SPY. We did over 100 million. So there was some trading today.
Right. There definitely was. We had several stocks. Netflix here after the close is already trading over $100.
Oh, good. So it's back above the level now. Yeah. Something everybody has to keep in mind is tomorrow the meeting starts, but the announcement's on Thursday. So we're probably going to get a decent type of day like we had today, where maybe not some astronomical volume numbers, but then certainly after tomorrow, and especially heading into the announcement on Thursday, things could get a little bit squirrely. So if you ended up having a good day today and you were patient yesterday, and if we get some good trading opportunities tomorrow, be patient to wait for the announcement to come out. Let the market jiggle and wiggle all over the place, and then if we pick a trend, you don't have to be in a rush because you made some money when you were prepared. And that's the whole point of these meetings, is setting up the whole week.
Right. Good. Actually, really good advice.
Okay. Awesome. I will speak to you tomorrow, Marion. Thank you very much.
Okay. Thank you.
Bye. Have a great night.